This is TechCrunch. Bloomberg reported that Anthropic is in the final stages of raising $20 billion in new capital at a valuation of $350 billion, with investor demand leading the company to raise twice the funding that it set out to obtain. The company raised $13 billion in equity funding just 5 months ago, but intense competition between frontier labs and the ongoing cost of compute has made it eager to raise as quickly as possible. Firms expected to participate in the round include Altimeter Capital Management, Sequoia Capital, Lightspeed Venture Partners, Menlo Ventures, Coatue Management, Iconic Capital, and Singapore's Sovereign Wealth Fund. But the bulk of the funding is said to come from the company's strategic partners NVIDIA and Microsoft. Anthropic is building on recent successes, most notably the deployment of its coding agents, which have software engineers raving about increased coding productivity. Now, last week, the company's release of new models focused on legal and business research rattled the share prices of publicly traded data firms as investors worried about the ability of AI to disrupt their businesses. Anthropic's rival, OpenAI, is reportedly assembling a new $100 billion fundraising round, and both companies are thought to be preparing IPOs ahead of a blockbuster summer in the markets, with xAI recently acquired by SpaceX also tapping public equity as part of the rocket maker's IPO. There appears to be no stopping legal AI startup Harvey's skyrocketing growth, with VCs continuously throwing money at it. Now, according to Forbes, the company is reportedly in talks to raise another $200 million at an $11 billion valuation, led by Sequoia and Singapore's GIC. If the deal closes, Harvey's valuation would jump by $3 billion in a matter of months. In December, the company confirmed it had raised $160 million at an $8 billion valuation, led by Andreessen Horowitz last fall. Back in June, it announced a $300 million Series E at a $5 billion valuation, led by Kleiner Perkins and Coatue. A few months before that, in February, it gobbled up a Sequoia-led $300 million Series D at a $3 billion valuation. CEO Winston Weinberg said that the startup, which offers an LLM AI for law firms, hit an annual recurring revenue rate of $190 million by the end of last year. Now, that was up from a $100 million ARR in August, so that's nearly double the contracted revenue in less than 6 months. That's it from TechCrunch. For more stories like these, go to TechCrunch.com.